What's happening, everybody? It's your boys, Steve Straza, Sean McLaughlin, coming to you live for the Options Flow Show. Straza, how you feeling, brother?
Good, man. How are you?
I'm doing well, man. Yeah, we're hitting that's the stage, the freak out stage. You and I are planning a big world trip. It's finally happening. We're booking flights. We're trying to book hotel rooms. We're going to 8 cities. It's crazy, and it's all hitting us right now because we got to leave in. I'm checking my math. Like 15 days.
This is real, Sean. This is real. This is really happening.
This is really happening. All right. Well, look. We teased, me and JC teased the Flow Show a little bit on the morning show this morning. For those of you who aren't watching the morning show, I don't know what you're doing. You should be joining us every morning. Straza and JC are giving you the lay of the land, setting yourself up for a good trading day, every trading day. So join us on the morning show. But anyway, we teased the Flow Show a little bit today, and the Follow the Flow report. So let's get right into it, I almost called you JC. Sorry about that. You're much better looking than JC. Straza, if you can, pull up the chart of the Flow Show or the Follow the Flow report, and let's dig into it. Let's see what if anything we are seeing.
Yep. So I got it right here. This is our Follow the Flow table. Do we have it up? I think we have it up.
I see it.
Yeah. So DraftKings. I mean, you mentioned it. I want to talk about what you guys want to talk about. You said it seems to you that DraftKings finds its way onto our scans or some sort of unusual options activity each summer.
It does. Am I wrong?
I don't disagree. It is a popular one among options market participants, though, it seems, right? Very liquid options, too. Tend to be pretty active in DraftKings contracts. This one stands out. Listen, expiring 6/23, right? So very short term. No, I'm sorry. Expired last week. Already out of it. Right. So 25.50. Basically, what was that? At the money? Pretty much at the money last week.
Yeah. Let's pull up. Let me pull up the chart here real quick on my screen. I mean, look, it's been in a strong trend all year, right? I mean, it's one of many stocks that just January 1st came around and everybody hit the accelerator, and just this thing's been screaming higher. I mean, on January 1st, this stock was $11, Straza. $11. We are more than double of that now.
We jumped.
Here's my thought. And I thought about this after the show this morning. If I know that the calls that we have on the report have already expired, so that's come and gone, but if people are getting aggressive with calls in a stock like DraftKings, and by the way, this can apply to a lot of these stocks that have had some big runs lately, I don't necessarily see that as being an aggressively bullish bet at this stage of the rally for some of these stocks. Instead, what I see it as is more of a stock replacement play. And I think we might have talked about this last week or talked about it somewhere. But I feel like it's more of a stock replacement play where people still want to participate on the upside, but they're feeling a little leery about committing too much capital at this stage of the game. So they're saying, you know what, instead of buying stock or instead of continuing to hold my large stock position that I have, I'm going to get out of the stock and I'm just going to buy call options. So if I've marked the top on this thing and it's going to roll over, at least I could define my risks very cleanly with call options. And so I think, to me, that trade that we saw in DraftKings kind of smells like that. And DraftKings is not alone in this. I think that's happening in a lot of stocks right now.
If they wanted to do that, would they would be buying in the money calls probably?
No, not necessarily. It kind of depends on how much leverage they want. If they want leverage, right, they're going to go for out of the money calls. If they want to more cleanly replace the stock that they're holding 1-to-1, right, then maybe they might choose an in the money call option. And there's no right answer. There's no better way to do it. I think, but I think if you're looking for a leverage, so maybe if you're feeling more speculative, then you would go out of the money because you'll get the leverage. Whereas if you're more of I'm long 10,000 shares of stock, but I don't want to hold this position anymore. I'll just go buy 100 in the money calls. They might do that instead, and it'll replicate that stock position going forward or going higher, but it'll minimize their loss if it reverses on them hard.
So, when's the last time you put a trade on DraftKings through the options market?
If you can stand by, I'll tell you exactly when the last
I know
time
we've
was.
talked about it. I know we've done it. I bought some short-term calls a few weeks ago, which expired worthless on me Friday because we've just been really sideways since
The
May.
last time I put a DraftKings trade on was May 8th, so not that long ago. And it got stopped out quickly. Got stopped out in 9 days. 9 days from the time I put it on.
I don't know. Do we take another shot here?
Let's put it if you could see on my chart here, guys. On May 8th, we got in following this big gap here. There was a big gap on May 5th, and that seemed like it was all systems go. And I got in 2 days later, right here, or 1 day later, May 8th, this red candle. And then this little drip kind of got into that gap. And I mean, yeah, my exit probably marked the low, but hey, that's what I get for sticking to my system. And it held. That level held. I was the low. My exit was the low.
Got shook. Listen,
I got shook. Not the first time I've been shook.
There's nothing wrong with re-entering, right? When conditions change or whatever.
I think you were riding me on this green day here when we were ripping back new highs. I think you were riding me saying, "Sean, you're such a wimp. You got out. Get back in."
So look, throw up my chart, Izzy. This is our bread and butter in this market, right? This is our pattern, guys. We want to buy the ones that look like this. Let's talk about DraftKings. We have, the trend is now higher. We can, really clearly define our entry in this trade at the August highs and the pivot highs from this year. Come in right around the low 20s here. 200-day moving average, curling higher beneath price. We're above those pivot highs, right? We got the breakout. Momentum is in a bullish regime. What are we doing? We're just doing a little sideways. A little bit of corrective action after the base breakout, right? So we've been sideways since pretty much May here. I think this thing eventually goes. It's probably a buy on strength, like buy the flag on strength type of a setup at this point. We were in the common and we kind of jumped. We jumped the breakout and got in around 19 in the common here. It was already hit. So we're looking for a way to get back into this one, in the coming weeks. And I think the move is you just buy the resolution of this little short-term continuation pattern, this little flag here.
Yeah. Izzy, if you want to jump to my chart, we're zooming on my chart a little bit here again. I think this 26 level, right? If we can get back above 26, I'm kind of highlighting with my cursor here. If we can get above that level, that feels like a good place to enter. And what I really like, I like this when we first got in, but I like it even more now. Look at the bottom of my chart. See this blue line that I'm kind of highlighting? This is implied volatility, which measures the price of options, the premium and options. And it just keeps trending lower and lower and lower. That means it gets more and more affordable to just buy calls if you're bullish on this thing. So if we could get above 26, let's say it happens this week, Straza. If we get above 26 this week, we still have 3 days left, or 2 days and whatever is left of today. What kind of, I want to go longer term because of the time. I'm thinking, maybe December or January options. If we go into the January options chain and we look at, let's say, the 30 strike calls, we could buy them right now for about 250, give or take, maybe 255 if we have to pay up. I feel like that can give us some pretty good. Well, that's the at the money. Actually, let me take that back. I would rather buy the 35s, which feel far away right now, to be honest to you. But that's the 25 delta strike. We could buy the 35 calls for about let's say 135, 136. I feel like that's a pretty affordable way to play that. And if this thing clears 26 and clears above 27, I think those calls can start getting juicy on us real quick.
So our next price target will be about 34.50.
Okay, good to know.
Making our way there, that's about 40%. Those calls, depending on when we get there, if we get there before January, those calls will start to really pay. I like it. 40% in a stock like DraftKings. Sure. Looking out to January, why not? Like you said, it's already doubled.
Yeah,
You know what else?
I hesitate to call DraftKings a meme stock. It's not a meme stock, but it has a lot of the characteristics that the meme stock players like.
It could become one.
It could become one. And so, in the back of my mind, and this was probably in the back of my mind when I put the trade on back in early May, is it's like, man, if this thing really gets ahead of steam, it's going to be one of those stocks that everyone's going to be talking about. All the junkies are going to get in. All the gamblers are going to want to play this thing. Like it really could rip. And so, playing it with January 35 strike calls and only paying under $1.40 for them, I feel like that's a good risk reward potential.
Some of our smart friends are already talking about. I was on the show with Phil and Howard last week, and I had no idea what he wanted.
Time out. Smart friends and Phil and Howard. That sentence doesn't go together.
Oh, come on. They're the best. That's so nice. I love those guys. It's so fun going on with them. But Howard and I, we didn't talk. We didn't discuss like what we were going to talk about. I just brought charts. That's what I do. I bring charts to the party, right? So I just brought the charts and showed up. We start going. First thing he says, I want to talk about DraftKings. And I was like, I got the chart here. I want to talk about DraftKings too. So, yeah, it seems like, word is getting out there.
Hey, by the way, shout out to Howard real quick, because you just reminded me of this. And we were talking about Singapore earlier. I got an email, just cold email from somebody in Singapore who apparently runs community for StockTwits in Singapore, and they want to hang out when we're out there. So we're going to make that happen.
That's great.
Yeah.
Hopefully people will email us like that because we want to find as many friends as we can out there, like you were saying this morning.
Yeah, we're starting to get people reaching out, which is awesome. So anyway, all right, so let's wrap it up. We got another show. JC and I got another show to do here in about 10 minutes. DraftKings. We like DraftKings. We like the fact that the chart looks great. We love that the implied volatility is cheap. We can afford to take a nice leveraged bet in January options. I like the January 35 strike, paying under $1.40 for them. We like the fact that NFL season's coming up. DraftKings, the junkies love DraftKings. If we can get some momentum going here, if we can get some kind of catalyst, and catalysts tend to happen, Straza, you know this. If there's a catalyst that's going to move the market, it tends to move the market in the direction of the trend that is already in place, right? And the trend for DraftKings is undeniably higher since January 1st. So if there's going to be any surprise news or surprise anything that's going to push the stock in one direction or the other, my bet is it's going to be higher, and we're going to get the junkies on board.
Reactions to earnings and news tend to occur in the direction of the short-term trend, like you're saying. This one is higher. Here's what else. One more thing about DraftKings before JC comes on and kicks me off. It is up today. Look at ARK. Look at all of its peer indexes, whether it's ARK, IPO index. Tech is getting hit really hard today. These growth stocks are coming off in a big way. Look at that candle in ARK. DraftKings is higher. In fact, of the ARK components, like 3 of them are up today. So that's
only 3
stock, right? Cyclical stock, or consumer cyclical stock, rather, not a cyclical stock. But all of its peer groups are lower. And DraftKings really bucking the trend today, so that kind of stands out from a tape reading perspective. If this sell-off can stop tomorrow, not even affecting DraftKings, so you probably get a nice move at the end of the week.
All right, there you go, folks.
I'll probably get in this one. I'll let you guys know.
All right, let me know. This has been The Flow Show. He is Steve Straza. I'm Sean McLaughlin. Thanks for tuning in. We will be back with you next week, probably on Monday. We'll see. But either way, we'll catch you next time. Take care, everybody.